Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's November 17th. This will be our chart lesson for today. I'm going to go ahead and mark this one in green. I forgot to put that one on there. I think it's really risky, but I'll explain that when we get to it. But there's a couple of different, basically, it's just a range day. You can see the highs up here and the lows were, this small red line was the lows of the previous day. You can see that right across there, how important that area was. And even though we went below it in the overnight, look what happened once we got into the regular session. We couldn't go below it again. So for most intents and purposes, this was a range day. Although I did see a trend up, a correction to the downside, we had a break of the bigger trend. And you could have seen this a couple of different ways in the end. I really believe that you could have played it either way. It if you see the green lines there, they're harder to see, but they're there. There was a trend line right up through there, and you can see it was holding, and it really was catching prices between this midline on the bigger picture and this trend line on the smaller picture, and it looks like a wedge. And that's how people get confused on these wedges, but really all it is two different patterns here. There's one pattern within another pattern. And if you follow the green one, you got the break, the move to a new high, and and then we corrected, and now we're headed higher again. But I believe there was finally a break of the blue one, a couple of legs down, and then a move to a new high, and we just kind of been stuck in that range. Then you got a new one working up, and you got a break of it, and we're trying for a retest now. There's only maybe 5 minutes left in the day, so we'll see by the time this lesson is over if we get a new high on this pattern here. But really, for like I said, for all intents and purposes, it's a range day. It had an upward bias until we had this little sell-off, and this is really just a two-legged sell-off, but one leg has two legs within it, and there's leg one. And if you look for a measured move on that, you can see we missed it by a couple of ticks. So, and there's just two legs in this one. And there's actually a couple of legs in this move too, but they're all on different levels. So, but on the big picture, the idea is there's one leg, and then there's a measured move. Simple as it's that simple. And there's just two legs within that second leg of this leg. And so that leads us back to the original pattern here when I came in. And actually, somebody else asked me about a different pattern. Would be off of these lows right across here, like so, and then off of these highs right in here, but it just doesn't fit very well. I think they actually maybe drew it like that. Let's just get the closes here. And then you copy that and bring it down, and still it gets you the same place, the bigger blue one. You still get the break of it and a move to a new high. So it doesn't really matter how you saw it here. All of them really get you to the same place. So maybe let's just look at the midline. I never even drew it. It looks pretty good there too. So you could have seen it that way as well. Either way, you still get the break of the channel here. It just would have been a little later and a move to a new high. So it doesn't matter how you saw it, whichever way. And that's what I always tell people. You don't have to get it exactly right. You just have to be close. You can't be completely wrong, because if you get it completely wrong, you're going to be way out of whack. But I was playing it originally off the green one, and then later in the day, the blue one. And of course, I played the smaller one and this one on the way down, and then you could have played this one on the way up. So pretty straightforward, really. In the end, it's just a range day. And this was a pretty steep sell-off here. But we took all that back and then some. This was the close previous day. This is previous day's close, or that's have to think about the color schemes every once in a while. The red is the low of the high day. The green is the high of the day. The black is the close. The yellow is the previous day's open. But that don't look right. Oh, the previous day. I guess that's, no, the big one, I'm sorry, the big one is current day. Here's the previous day is a smaller one. The bigger lines are current day stuff, and the smaller lines are the same thing, same color scheme, except the previous day. So this was the previous day's open right across here, and you can see that looks correct. And this was today's open, and that looks correct. So yeah, for whatever reason, I have to think about that sometimes. So, but let's talk about the trades. When I came in, the 7 o'clock hour, we were kind of working in this little area right here, and I was looking at this green channel. Let's just make it a little darker for now. Just to make it a little easier to see. And we were working up, and we notice the new high, pullback, first entry, pullback. There's a second entry long right there, right off that green trend line. Then prices pull back a little bit, and you get a, notice that that's a double bottom. You get a first entry short, a second entry short. So there's a failed second entry short there, and then another second entry long counting off that high. Pull back, first entry, pull back. And again, everything is bouncing right off that trend line. So I like that. And you really could have considered entering here, but because those are all three stacked up there, I think it's a little risky. I think you're better to wait and see, and then you get that little trap in the next one up. And you never get another second entry then until here. Notice that new high, pull back, first entry, pull back. That's a second entry long. It's the first break of that green channel. You're probably going to get a retest. So I like that one to the upside. And then it pulls back and it makes a double bottom, but it's also kind of a, notice that low right there. It's kind of a double retest of that. We went a little low, so it's really the same thing there. So you could just treat this like a double bottom, and notice how that previous day's open is holding right there. It's an important spot. So an aggressive guy is probably going to go long right there. It's not a great setup. If you were looking at this other possibility, it does bounce right off that. So that's enough reason if you're wanting to be a little aggressive to take it. But notice it's just a first entry. But it is a double bottom, and it is like the 1, 2, 3, fourth time we've tested that level. That line right across there is pretty much the price level, and so it was probably worth the risk if you trading aggressive. And then you finally get the correction. I think it was too risky to go long any further up through here, so I didn't mark anything else, because now you've got the break of this one. You got the bounce here. You're coming off this high. You're really trading too high here. You want to wait till it comes back to here. And you do get a first entry there on that one, but you already had a break of this green one, and 1, 2, and then really 1, 2 legs up. So I just think it was really risky entering right there on a first entry, even an aggressive trade, because look how we came right through that. Of course, we came right through the EMA right there too. And this actually setup does, but because of the green channel is the reason I don't like them. If you did enter there on that first entry being aggressive, well, that's what happens sometimes when you're too aggressive. It does come back and give you a chance to get out before it goes lower. But if you drew these trend channel lines down through here, right here, you don't get a break until here and a move to a new low. And then I think and then now you've got a break of this one. And so now you've got, if you want to be aggressive, there's a chance to enter right there. This one actually should have been green, because that's a little aggressive because it's a first entry. But notice there's a low, a move up, pull back, and a second move up. So on a smaller level, it is a second entry long. It's good for just enough for a scalp, and then it sells off again. I don't think you can go short right here yet, but comes down here. I don't think once it comes down here and makes a lower high and a lower low, I don't think you want to go long right there either, especially if you drew that line off there and you notice you're bouncing off of. That's telling you there's something else in play here. And I just copied that and drug it up to here. And then when we come back again to there and turn down, it looks like a spike in channel. So notice that pullback, first entry, pullback. There's a second entry short right there. And then we drop down again, and you overshoot it this time. So you got to be careful here. And notice we overshot it about the same amount, and you get that big bearish bar. It was really tempting to be thinking short right there. But notice this trend line working up, and we hadn't had any break of it yet or close outside of it. So I think you got to wait on this one because you kind of got conflicting information here. And notice all that 1, 2, 3, 4, 5. There's 5 bars in a row there. A couple of them are dojis. The odds tell us it'll fail out one side, then probably fail out the other, and then go higher. It just fails out the one side and turns into a breakout pullback long, but it bounces right off that trend line again. And notice you tried to go lower once, twice, and so you really had a failed second entry short here, but I don't think you want to go long right into that at that point. And if you didn't get suckered into the short right here, then when it turned back up, I think that's a great place to go long there, because you're shooting for you're looking for a reversal type pattern to look for a retest off of this channel, because that's the first break, and there it is. You get the retest and the new high, and we closed and we didn't quite get a new high on this channel, but you can see that trend line working up there clearly. And you get if you'd got a second entry here off the midline, it would have been nice to enter it, but you don't get one, and it comes back, and you get a second entry right here, right off that same trend line. Pull back, first entry, pull back, second entry, and it just kind of ends up chopping around. And the rest of the day, I just think you got to stay out of that. There is a little channel working down there. But I just don't think it's worth. By the time you can get in it each time, you're too close to the other side. The only way to really trade that is just to sell this high blindly or buy this low blindly, and you see what happens. If you sell this one blindly, you get burned there. Although the bias is still kind of, somewhat up at this point, because you got this working up, and that's the first break of it. So, but if you're looking at the bigger pattern, you had this break, and now you've got a new high in place, so you should get a correction that lasts at least an hour. Let's see how long the correction started. About 12:30, and it ended around 3 o'clock. So, okay, I had an interruption there. I think we were pretty much done with all the trades, and of course, I believe the bigger pattern was a range. There was an uptrend within it. We had a break, moved to a new high, and then we corrected for a couple hours there, and finally had a break of that and just hit the close. So not much else you can say about today. We'll just have to kind of see how things play out the rest of the week. But it's been, we have a slightly upward bias with things kind of being range bound most days. So, but I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.